Warning: these social media platforms may be hazardous to your health. Censorship kills. Pain coming. This has been a PSA by Breaking Spectre.
Well, good morning, everybody. How we doing? Spectre here for another edition of In Case You Missed It news here now on this December 2nd. Hopefully you guys are doing well. Not looking too bad out here this morning. Fairly unseasonable temperatures, but hey, we'll take it. Lots to get into here this morning. We'll take a quick spin through the old marketplace here this morning. We'll take a look at what's been going on by way of manufacturing. Talking about carbon-free con, and of course millions of Americans scrambling to become independent of these systems as everything collapses around us. Trump's social media venture, we'll talk a little bit about that here on the broadcast. Of course, Jack stepping down from Twitter here recently, what he's doing here. Erdogan obviously firing his finance minister yesterday. More shenanigans going on with the lira, and of course we got some initial jobless claims out here this morning. We're going to get into all of that and more, so stick around and I'll be right back.
Hey everybody, Spectre here. Just wanted to give a big thank you to all you guys who continue to support my work. Jump in, day out on the streams, support all the various pieces I put out, etc., etc. And in doing so, I figured what the heck, we'll put some merch out there if you guys wish to continue to support and help defray some of the costs of streaming, which many of you guys know many of us incur. Got a handful of shirts and that here. Spectre Does News. We got the Realize, Real Lies shirt and that you hear on my PSA periodically. And of course the No BS insignia from the show I do over on the 5x5 channel, all of which you can get for the low price of $19.99. Aside from that, you can get the Let's Go Brandon hashtag FJB shirt as well in a variety of colors. And I've recently added the hoodies in a variety of colors you can get right there as well. And last but not least, you can grab yourself a No BS shirt and the Zip Up hoodie as well. If you don't want any articles of clothing, well, you can grab yourself a mug or a 20-ounce water tumbler if you wish. Your choice. And of course, as always, just want to thank you, the listeners, the audience, those who are in chat day in, day out. Thank you for your continued support.
All right, well, right into it we go here this morning. Weather-wise, radar's not looking too terrible bad. Looks like in the upper Midwest we might have a little bit of a disturbance, and that cruising across north, South Dakota. Maybe into Minnesota here, and of course we've got perhaps some shower activity in that picking up across the Pennsylvania, New Jersey area, maybe heading toward New York here a little bit later on. Temperature-wise, not looking too bad as well here this morning. This afternoon we look to be fairly good. Got some 50s and perhaps some low 60s in that cruising through here. So I'm not going to complain too much about that. All right, that being said, futures rebound fizzles on slowing iPhone demand and Omicron fears. Yes, we got to continue to whip up this frenzy about nothing on all this Omicron business as U.S. index futures regain some ground alongside Asian markets, while European stocks slumped to session lows in a delayed response to yesterday's late Omicron-driven U.S. sell-off as markets remain volatile following the biggest two-day plunge in more than a year, spurred by concern about the Omicron coronavirus variant and Federal Reserve tightening. Investors await data for unemployment claims as well as earnings from companies including Dollar General and Kroger. Tech is the weakest sector, dropping in sympathy after Apple warned its suppliers of slowing iPhone demand. Nasdaq futures paired earlier gains of up to 0.8%, trade down 0.1%, while S&P futures are only 0.2% higher after rising as much as 0.9%. And here we see some of the E-mini S&P future prints here this morning. Let's see. Cruise ship operator Carnival jumped 3.8% in pre-market trading, while Pfizer and Moderna fell as the World Health Organization said that existing vaccines will likely protect against severe cases of the variant. Boeing contracts gained 3.4% after a report that the flagship 737 MAX aircraft has regained airworthiness approval in China. And with lots of uncertainty surrounding the scamdemic and Fed policy, the size of potential market swings is still considerable. Here's some other notable pre-market movers today. Apple shares fell 1.8% in pre-market trading after the iPhone maker was said to tell suppliers that demand for its flagship product has slowed. Wall Street analysts, however, remained bullish. U.S. stocks tied to former President Donald Trump rise in pre-market trading following a report that his media group is in talks to raise new financing. We'll talk a little bit about that here a little bit later on in the broadcast. But Digital World acquisition was up 24%. Funware was up 38%. Catapult shares sink 14% in pre-market after the finance technology firm said its gross originations over a 2-month period were lower than 2020 levels. Ver shares jump 8.1% in pre-market trading after its COVID-19 antibody treatment, co-developed with Glaxo, looked to be effective against the new Omicron variant in early testing. Snowflake is up 17% pre-market following quarterly results that impressed analysts, though some raised questions over the data software company's valuation. CrowdStrike shares jumped 5.1% in pre-market after it boosted its revenue forecast for the full year. Square's shares are up 0.4% higher in pre-market. Corporate name change to Block Inc. indicates a symbolic rebirth, according to Barclays, as it shows a broader set of possibilities than those of a pure payments company. And again, we'll talk a little bit more about that here later in the broadcast as well. It says Okta shares advance in post-market trading. Third quarter results show the cybersecurity company is well positioned to deliver growth, even if some analysts say its guidance looks conservative and that its growth was not as strong as in prior quarters. Let's see. Also, V4 Pharma shares rise as much as 18% in a report that Australia's CSL is in advanced talks to acquire the Swiss-based drug maker and developer while working with Bank of America on an Aussie 4 billion funding package. Argenx jumps as much as 9.5% after Kepler Cheuvreux upgrades the stock to buy, saying the biotech company is on the brink of launching its first commercial product. Dürr gains as much as 7.2%, the most since August 10th, after Deutsche Bank upgrades to buy and sets a street high PT of Euro 60 for the German engineering company, citing the digitization of the industry. Daily Mail and General Trust rise as much as 3.9% after Rothermere's continuation raised its bid for all of DMGT's Class A shares by 5.9% to 270p a share in cash. Claribo surges as much as 54% as shares start trading on Nasdaq Stockholm after the Swedish property company raises its SEK 750 million in an IPO. Eurofin Scientific declines for a fourth session, falling as much as 3.2% as Goldman Sachs downgrades the company to neutral from buy following strong outperformance year to date. Deliveroo drops as much as 6.4% after an offering of 17.6 million shares by CEO Will Shu and CFO Adam Miller at a price of 278 points a share, representing a 4.2% discount to the last close. M&S falls as much as 3.4% after UBS cut its rating to neutral from buy, citing limited upside to its new price target as well as little room for meaningful upgrades. Let's see here. Flashing forward into the old market snapshot, S&P 500 futures up 0.7% to 4540 and change. The Stocks Europe 600 down 1% to 466 and change. Nikkei down 0.7%, 27,753.37. Shanghai Composite little change at 3573.84. Brent futures up 2.4% to 70.53 a barrel. Gold spot down 0.6% to 1771.73 per ounce. The U.S. dollar index little change at 96.03 and euro little change at 1.1320. Some overnight news out of Bloomberg. Federal Reserve Bank of Cleveland President Loretta Mester said she's very open to scaling back the Fed's asset purchases at a faster pace so it can raise interest rates a couple of times next year if needed. The United Nations gauge of global food prices rose 1.2% last month, threatening to make it more expensive for households to put a meal on the table. It's more evidence of inflation soaring in the world's largest economies and may make it even harder for the poorest nations to import food, worsening a hunger crisis. Germany is poised to clamp down on people who aren't vaccinated against COVID 19 and drastically curtail social contacts to ease pressure on increasingly stretched hospitals. Some investors, buffeted by concerns about tighter monetary policy, are turning their sights to China's battered junk bonds, given they offer some of the biggest yield buffers anywhere in global credit markets. Pfizer Inc. says data on how well its COVID 19 vaccine products against the Omicron variant should be available within 2 to 3 weeks, an executive said. And also, GlaxoSmithKline plc said its COVID 19 antibody treatment looks to be effective against the new Omicron variant in early testing, if any of that is to be believed. Out of News Squawk, and back over to Asia. Asia stocks swing as investors weigh Omicron impact, Fed views. Apple tells suppliers iPhone demand slowing as holidays near. Moody's cuts China's property sales view on financing difficulties. And faith in Singapore leaders hit by record COVID wave, poll shows. Back over to Europe, Shell kicks off first wave of buybacks from Permian sale. Omicron threatens to prolong pain in bid to vaccinate the world. Apple suppliers drop pre-market after report demand slowed, and Vallejo, Gestamp, gain after Barclays raises to overweight. Let's see, on the event calendar today, not much doing, but at 7:30 a.m., November Challenger job cuts is down 77% year over year. Prior was down 71.7%. 8:30 a.m., we got November initial jobless claims, estimate of 240,000. Prior was a 199. Also at 8:30, November continuing claims estimate of 2 million. Prior was a 2.05 million. At 9:45 a.m., we've got November Langer Consumer Comfort. Prior print was a 52.2. So a little bit of a round tripper through the old market here this morning. Aside from that, U.S. manufacturing slumps to the weakest since 2020 as cost inflation hits record high. This came out yesterday. And of course, October and November have seen U.S. macroeconomic data surprise to the upside, admittedly from a depressingly low-level overshoot, and flash PMI signaled an uptick in manufacturing earlier in the month. But that was the end of the good news. Market U.S. manufacturing was a big disappointment, tumbling from 59.1 earlier in the month to 58.3, final for November, which is below October's final 58.4, the weakest print since December 2020. ISM U.S. manufacturing also disappointed, though only modestly, printing at a 61.1 versus a 61.2 expected, but up from October's 60.8. So market worst since 2020 and ISM best since March. And there we see that graphically depicted. Says market warns that longer lead times, supplier shortages, and higher energy prices, meanwhile, pushed the rate of cost inflation to a fresh series high. ISM, on the other hand, saw prices drop. That doesn't seem to make sense, which is odd because obviously commodities are all up in prices, everything from adhesives to aluminum to paper to silicone to surfactants and zinc, etc., etc. Very few are down in price: aluminum, plastic, resins, polypropylene, steel hot rolled, things of that nature. Chris Williamson, chief business economist at IHS Markit, said broad swaths of U.S. manufacturing remain hamstrung by supply chain bottlenecks and difficulties filling staff vacancies. Although November brought some signs of supply chain problems easing slightly to the lowest recorded for 6 months, widespread shortages of inputs meant production growth was again severely constrained to the extent that the survey is so far consistent with manufacturing acting as a drag on the economy during the fourth quarter. Says while demand remains firm, November brought signs of new orders growth cooling to the lowest so far this year. And that was linked to shortages limiting scope to boost sales and signs of pushback from customers as prices continued to rise sharply during the month. While average selling price inflation eased as firms sought to win customers, the rate of input cost inflation hit a new high, hinting at a squeeze on margins. So, is it any wonder that the yield curve is collapsing in fear of an imminent policy error by the Fed tightening into a slowdown? And of course, that remains to be determined. Obviously, we'll keep our eyes and ears on that in subsequent days, weeks, months, however long it takes for all this to play out. So aside from that, how to spot a carbon-free con? Obviously, on the heels of the COP26 and all the bloviating and that took place there, a whole bunch of hullabaloo about nothing, no firm commitments on anything other than a bunch of jawboning. Well, this comes out of oil price as nearly every company on Earth seems to be setting themselves net zero targets, but a majority of those pledges have very little substance behind them. Just like COP26, a lot of bloviating. Says one major issue is that companies set these targets so far in the future that there is next to no accountability for those in charge. And another thing to look out for is the wording of these commitments, with companies and countries for that matter often moving responsibility for their emissions elsewhere. So, apparently, we get this full page ad, a glorious spread of green and blue, green leaves against a blue sky, says where clean energy lives, and declared in a small inset in the middle of the page, an ad for the botanical garden, maybe? No, for the New York electric utility Con Edison. Says near the bottom of the page in smaller letters, the advertisement stated, Con Edison is committed to net zero for our direct emissions by 2040. Sounds all well and fine, right? Says, our first thought was, wow, that is a lot earlier than most companies. Then we read the carefully crafted wording, net zero for our direct emissions, end quote. Then the message sank in, tempering our initial enthusiasm. But first, the background. Con Edison provides electric, natural gas, and steam service in the New York metropolitan area. The company, through affiliates, also owns shares in solar energy projects and natural gas pipelines. Con Edison does not generate electricity itself. It just delivers energy in various forms. It uses fossil fuel to generate the steam that it sells and obviously uses gasoline and diesel in its considerable vehicle fleet. The independent system operator, NYISO, is responsible for the fossil fuel content of the generating mix in the state, only 40% from fossil fuel combustion now, and intends to reach 100% zero carbon power generating sources by 2040. In the immortal words, more or less, of a former Con Edison CEO who was being questioned about a gigantic service outage, we are like the milkmen. We only deliver the product. So Con Edison has, then, committed to eliminating the carbon emissions from its own operations, but not those of its suppliers or customers. That makes the 100% claim, as stated, correct, but misleading, and possibly trivial as well. Why should it take 19 years to reach such a modest goal for an electric utility with no meaningful power generating assets whatsoever? Where is the sense of impending climate emergency? But before one becomes too cynical, look behind the 100% claim and we discover that the company does have plans that go beyond its own direct CO2 emissions. They include programs to reduce consumer consumption of natural gas, reduce leakage from gas transmission, replace natural gas with renewable gas, and encourage electrification of transportation. Well, plenty of projects are on the planning board. Many of them are somewhat aspirational, vaguely timed, and awaiting partners. Given that the warnings about global warming trace back over 50 years and that New York's mayors and governors have been banging away at the theme of getting ready for at least 20 years, the content of this recent ad says something about corporate priorities. Kind of reminds us of a story told by an Irish folk singer. Someone noted to him that Dublin celebrated its 1000th anniversary a decade or more late and was asked, is there an Irish equivalent to the word mañana? To which the singer replied, no, we don't have any other word with that sense of urgency. 3 final observations. First, as financial analysts, when we hear a typical corporation's CO2 or emissions target date of 2050, our first thought is this, okay, your assets have a 30-year depreciable life, so that compliance date means no write-offs, no financial pain. We can think of this as the no financial pain target date. Second, given the decade-plus longevity of most CEOs and top corporate officers, a compliance is that far in the future, there is little incentive for rapid compliance, especially if this implies any economic impairment, which in turn implies decreased CEO compensation. And lastly, these lengthy CO2 emissions compliance dates may simply reflect a belief that a future political administration, like the Republicans, will be far more lenient in these matters, so that a corporation will be able to reduce emissions at their own pace or not at all. These all suggest to us why lengthy CO2 emissions compliance dates decades away make sense from a corporate perspective. Maybe not from a societal perspective, but that's another matter. So okay, Con Edison has a 2-decade horizon, not 3 decades, but it is in the same ballpark. So bottom line, just like what we learned out of the COP26 and everything else, the corporations now have to put these lofty targets out there, a couple decades in advance. They hope that, in 20, 30 years, you will have forgotten all about them putting, things of that nature down on paper. And who's going to hold them accountable anyway? As the article alludes to, CEOs are going to change. Your top brass are going to change all across the board. It's a whole bunch of nothing. And that's exactly what we should probably expect from all of this. Not a stinking thing. So aside from that, millions of Americans are scrambling to become independent of the system as it collapses all around them. Interesting piece out of the Economic Collapse blog from Michael Snyder here. Says, once upon a time, all the major institutions in our society were running super smoothly, and most people could rely on the fact that they would always be there when they were needed. But now things are going haywire everywhere that you turn. So we are in the midst of the worst supply chain crisis in our entire history. The crime and violence in our largest urban areas is starting to spiral out of control. Millions upon millions of our fellow citizens are absolutely seething with hate. And this scamdemic is causing officials to make extremely irrational decisions that would have been unthinkable during quote-unquote normal times. Now, earlier today, I was horrified to hear that one of my readers had just been denied access to a local hospital. He was taking his wife in for a very important reason. But there were people at the entrance that were checking the vaccination status of everyone that attempted to enter. He and his wife not being vaxxed, and so they were turned away. Says that means that they will not be able to have access to any services at that hospital for the foreseeable future. Did you ever imagine that a day would come when you might not even be allowed to go inside your local hospital? In other cases, hospitals are not providing certain services any longer due to severe staffing shortages. In fact, the Wall Street Journal is reporting that some institutions may lose up to a third of their employees due to Biden's mandate for healthcare workers. That is madness, and I had never imagined that we would see such a thing happen in America. But here we are. Moving forward, many Americans are going to have to start figuring out how to provide their own health care, because our healthcare system is being shaken like never before. Meanwhile, we are seeing a historic burst in entrepreneurship and self-employment, as millions upon millions of Americans seek to create jobs for themselves. Thanks to Biden's mandates, there are millions upon millions of Americans that may soon be ineligible to work for any company that employs 100 or more workers. And for now, that particular mandate has been put on hold, but it could be reinstated at any time by the courts. In any event, many Americans have decided that now is the time to leave the system and start working for themselves. So far this year, a whopping 4.54 million new small businesses have applied for a federal tax identification number. That is up 56% from 2019. Entrepreneurs applied for federal tax identification numbers to register 4.5 million new businesses from January through October of this year, up 56% from the same period of 2019. The Census Bureau data show. Says that was the largest number on records that date back to 2004. Two-thirds were for businesses that aren't expected to hire employees. Now, I have always encouraged entrepreneurship as a way for people to become more independent from the system. The good news is that there are literally millions of different ways to work for yourself in this country today. Now, if you're considering taking such a leap, focus on what you're good at. Personally, I would be an absolutely horrible auto mechanic, and if I tried to be a hairstylist, it would be a complete and utter disaster. But I can write, and so that is what I do. Others can't write, but they are incredibly talented in other areas. The key is to find something that will add value to the lives of others. The global energy crisis is another factor that is pushing people to become more independent of the system. This year, Pennsylvania residents are being warned that their energy bills could increase by approximately 50%. Energy costs in Pennsylvania are set to rise as much as 50% in some parts of the state beginning December 1st, according to the Pennsylvania Public Utility Commission. Most Pennsylvania regulated electric utilities are adjusting the price they charge for the generation portion of customers' bills on December 1st for non shopping customers, also known as the price to compare, like PUC explained in a press release. The PDC averages 40 to 60% of the customer's total utility bill. However, this percent varies by the utility and by the level of individual customer usage. And as the global energy crisis escalates, we could see more painful energy shortages like we recently witnessed in China, India, and Lebanon. This has motivated a lot of Americans to take matters into their own hands. And at this point, demand for wood burning stoves is off the charts. At Central Arkansas Fireplaces in Conway, a suburb of Little Rock, the flood of orders for wood stoves has been so overwhelming that units purchased today won't be delivered in time for this heating season. You can't get a stove until at least April, said Lakin Frederick, an employee at the store. Needless to say, demand for firewood has also soared, and this is pushing prices into unprecedented territory. At Firewood by Jerry in New River, Arizona, a cord of seasoned firewood, roughly 700 pieces or so, goes for about $200 today. That's up 33% from a year ago. At Zia Firewood in Albuquerque, the price is up 11% since the summer to $250. And at Standing Rock Farms in Stone Ridge, a bucolic little town in the Hudson Valley that's become popular with the Manhattan set, the best hardwoods now fetch $475 a cord, up 19% from last year. But those that prepared ahead of time don't need to pay through the nose because they already have all the firewood that they need. And for years I have been pleading with people to make preparations in advance for the difficult times that were coming. Now those difficult times have started to arrive and things are beginning to get really crazy out there. Even entire communities are trying to become more independent of the system. In California, the insanity coming from Sacramento just became too overwhelming, and so the entire city of Oroville decided to declare itself a constitutional republic. Oroville declared itself a constitutional republic, a place where the local leaders pledge to fight mandates they say go too far. Any executive orders issued by the state of California or by the United States federal government that are overreaching or clearly violate our constitutionally protected rights will not be enforced by the city of Oroville against its citizens, read the declaration passed this month by the city council. This is a pretty dramatic move. But the truth is that communities all over the nation are going to have to try to do what they can to insulate themselves from the authoritarian measures that are being instituted on the state and federal levels. If you live in a city or state where things are particularly bad, you may need to pick up and move to an entirely different part of the country. I know that sounds extreme, but we live in extreme times. And if you want a normal life, you'll want to find a place where people are still determined to live relatively normal lives. Because as the system continues to collapse all around us, things are only going to get even crazier. Our country is literally starting to come apart at the seams, and a lot more quote unquote change is on the way. So a lot of what Michael Snyder picks up on here, we've covered here in recent days, weeks, and the like. And of course, yes, wood prices are up. Can't find stoves left and right. I'm sure if you're fairly crafty, you could probably build something out of a 55-gallon barrel or something if you so desired. Had the handymanship of being able to do so. And then, of course, the trick is going to be trying to find suitable fuels, whether it be wood or otherwise, to heat your homes as it gets cold, or if and when natural gas prices go through the roof. So, aside from that, talk a little bit about Trump's social media venture soaring and talks of over $1 billion raise at much higher valuation. It's only been what, maybe about a month ago, we saw Trump kick off this SPAC and that to try and launch this social media site. Well, markets may be crashing, but not every stocks is getting smashed into the close, and one notable outlier is blank check firm Digital World Acquisition Corp., better known as Donald Trump's new social media venture, which, according to a late day report from Reuters, is seeking to raise up to $1 billion in a PIPE deal by selling shares to hedge funds and family offices at several times the valuation it commanded in a deal with a blank check acquisition firm in October. Says while the original deal from September valued Trump Media at $875 million, including debt, just 2 months later, the company is seeking to raise up to an additional $1 billion at a valuation of close to $3 billion to reflect Digital World's share rather rally after Trump supporters and day traders snapped up the stock. Indicatively, DWAC's market cap closed at $1.8 billion today. Says the proposed deal is the clearest indication yet that the deal makers behind Trump's Media and Technology Group, which is yet to roll out of the social media app, it says it is developing, are seeking to capitalize on the market euphoria around their venture, which has, so far, been fueled by its ambitious goals rather than a business that is up and running. Says as a reminder, Digital World shares were originally valued at $10 each in the deal with Trump Media back on September 26th. However, just weeks later, Trump Media is looking to secure a private investment in public equity, which is PIPE, that values DWAC shares closer to their recent price, currently hovering around $40, the sources said. It is a departure from most PIPE deals, which are typically done at $10 a share and would result in a much greater dilution of existing Digital World investors. Says Reuters sources added that the Digital World shares may be valued based on a 20% discount of their 10-day volume-weighted average price. But there's a few caveats. Says while most PIPE transactions are inked before a deal to take a company public is rolled out, it is far from certain that the companies will raise the entire billion they are seeking following the deal announcement. Many Wall Street firms have snubbed the opportunity to invest, and many of the investors participating in the confidential road shows for the PIPE are hedge funds, family offices, and high net worth individuals, the sources said. Some may have decided that this is the most efficient way to buy favor with the person who, according to online betting services, will be the next U.S. president. Trump has also been personally involved. He has been calling some investors to ask them to make a commitment to the PIPE of more than $100 million. The second of the sources said. Investors attending the roadshow were shown a demo from the planned social media app called Truth Social, which looked like a Twitter feed, the sources said. And that said, the deal also faces regulatory risk. U.S. Senator Elizabeth Warren asked Securities and Exchange Commission Chairman Gary Gensler last month to investigate the planned merger for potential violations of securities laws around disclosure. The SEC has declined to comment on whether it plans any action. Trump Media and Technology Group and Digital World have asked investors to finalize commitments to the PIPE by the middle of December, the sources said. In a PIPE roadshow attended by one of the sources, investors were asked to commit between 10 and 20 million. Neither Trump nor Digital World executives made an appearance, and the investor presentation was led by David Borrell, the president of E.F. Hutton, an investment bank that advised Digital World on the deal, the source said. A Trump Media and Technology Group representative was also in attendance, the source added. Truth Social is scheduled for a full rollout in the first quarter of 2022 and is the first of 3 stages in the Trump Media and Technology Group's plans, followed by a subscription video-on-demand service called TMTG Plus that will feature entertainment, news, and podcasts, according to the news release. It says in a slide deck on its website, the company envisions eventually competing against Amazon.com's AWS cloud service and Google Cloud. So, highly ambitious plans of Trump, but what do you expect? And obviously, the vehicle they have chosen to do this via these SPACs, uh, obviously not necessarily the traditional method of, starting a company, having an IPO, going down that path. And I think the way I read this is that they're going to try to get the getting while it's good before somebody like Elizabeth Warren and the SEC catch on to this and start putting the kibosh on some of these special purpose vehicles and that they're using to finance said junkets, as it were. So, aside from that, having abandoned Twitter, Jack Dorsey goes all in on crypto and renames Square. Talked a little bit about this at the top of the show here. Says, well, that didn't take long. Says less than a week after Dorsey stepped down as CEO of the angry scream fest known as Twitter, it appears he has moved all in on crypto by renaming his other company from Square to Block. And as Dorsey says, the change to Block acknowledges the company's growth. Boy, could they come up with anything a little less flashy? Square to Block? How original. Anyway, there's the new stuff pertaining to Block, I guess. Says it's now clear that Square is Dorsey's favorite child and needs all of his attention to advance the role it could play in popularizing Bitcoin, the best known crypto. Says if I were not at Square or Twitter, I'd be working on Bitcoin, Dorsey said at a cryptocurrency conference in Miami in June. Says at the time, he said both companies have a role to play. Says as Protocol.com reports, Square has been riding the crypto wave since its Cash App added Bitcoin trading almost 4 years ago. Says by 2021, 1 million Square users were buying Bitcoin for the first time on Cash App. Square announced in February that 5% of Square's total cash was in Bitcoin. In June, Blockstream, the Bitcoin mining company, announced that Square was investing $5 million in a solar-powered mining operation. And in July, Dorsey said Square was building a new business that would operate alongside divisions like Cash App and Tidal to build tools for developers focused on Bitcoin. Square also helped set up the Cryptocurrency Open Patent Alliance, which aims to defend the industry against patent trolls. Recently, Square also announced that it was developing its own hardware crypto wallet to make Bitcoin custody more mainstream. Bitcoin is for everyone, Dorsey said in a tweet. It's important to us to build an inclusive product. And despite those moves, Square remains a relative newbie in crypto. Bitcoin trading has juiced its revenue lately, but it's going up against nimbler, faster moving competitors like Coinbase and Robinhood. And Jack wants all in on crypto, Constellation research analyst Ray Wang told Protocol. He doesn't want to miss the next big thing. It's early in the marketplace, Wang said. This space will be won by a few players. We are in 1997 for the internet. So one challenge for Dorsey and Square is his well-known allegiance to Bitcoin, which is increasingly just one cryptocurrency among many, and not the most technically sophisticated one. Wang says Square needs to be in the middle of smart contracts, a technology most firmly established on the Ethereum blockchain. So I'm not going to go through and read the rest of the statement here from Square, but bottom line, Dorsey, since his announcement of departing Twitter, appears to be going all in on Square, which is now Block, and obviously he's going to be dealing a lot more by way of Bitcoin and the crypto side of things. So aside from that, Erdogan fires Turkey's finance minister, replaces him with rate cut friendly puppet. And of course, we've been watching this play out over subsequent weeks. Lira's been tanking, and of course, the looting and that by the folks behind the scenes, I'm sure, continues. Says in retrospect, it should have been obvious that something big is coming out of Turkey today when overnight the central bank intervened in the FX market, both spot and futures, for the first time since 2014 to halt the ongoing rout in the Turkish lira. Says, well, that something was revealed just around midnight Turkish time when President Recep Tayyip Erdogan announced he was firing Turkey's finance minister, Lütfi Elvan, who vacates his post after a little more than 12 months in office and will be replaced with Nuruddin Nebati, according to a decree published in the official Gazette. Incidentally, back in 2018 when the Turkish lira collapsed, first started in earnest, Erdogan appointed his son-in-law, Berat Albayrak, as Finman, and the clearest sign at the time that Turkey's economy was set for a spectacular collapse. And so, having already fired virtually every central banker in the past 3 years just to appoint hand-picked puppets, Erdogan has now moved to other branches of the Banana Republic. The termination exposes growth rifts in Erdogan's administration over a string of aggressive interest rate cuts that have undermined the currency. So while now much is known about the country's new finance minister, who until today was deputy finance minister, last week Nebati was said to be quoted by the local press as saying that the country is determined to continue with its policy of interest rate cuts. So the article in Duvar said that the Deputy Finance Minister Nuruddin Nebati said in a series of tweets late on November 25th that Turkey is determined to continue a policy of interest rate cuts and manipulative attacks on the lira, which has plunged to all-time lows this week and will not leave any lasting damage. Since 2013, every time we attempted to implement our low interest rate policy, we were met with strong opposition. This time, we are determined to carry this out, he wrote. The manipulative attacks waged on the Turkish lira over our low interest rate policy will not seriously damage our economy, he said. Though there were turbulence in the real sector with the last exchange rate attack, our economy maintains all of its strength, he added. And so, prophetically, the article also quoted the lead of the opposition, the Y or Good Party, Meral Aksener, who has said that Nabal's messages signaled that Treasury Minister Lufti Elvan might be ousted soon and that Mr. Nabati is our new minister candidate. In retrospect, he was right. And now the question becomes just how active will the Turkish central bank be in the FX market as it seeks to halt any further selling of the lira? And how long before one or more significant FX players team up and drain the central bank of all of its, already negative on a net basis, reserves? So yeah, apparently they have they're to the negative by way of reserves. And of course, before the central bank capitulates, sending the lira into a hyperinflationary collapse. So we'll have to see how that shakes out. Erdogan blaming everybody but himself, obviously, for looting the cookie jar and that, I'm sure, over the years. But hey, it's all the foreign speculators and quote unquote hot money flowing into Turkey that has caused all of their problems. So aside from that, initial jobless claims bounced from 53-year lows this morning. We talked a little bit about the jobs and that, where they were yesterday from the ADP print. Today we get initial jobless claims rose from a 53-year low at 194,000 to 222,000 last week. So we're starting to see a bit of an uptick there, I guess. It says the total number of Americans on some form of government dole remains above 2 million. Here we see that depicted graphically. It says the only cohort that saw an increase in overall claims was regular state, whatever that means. And apparently here from November 13th through the 6th change prior year, we're sitting at about 20.7 million and change here. It says Virginia and Texas saw the biggest drop in claims last week, North Carolina the biggest jump. And here they've got that laid out state by state, the weekly change in initial claims by state, not seasonally adjusted. It says so claims are hovering at their lowest in 5 decades. Yeah, maybe it's time to taper. So there we have it by way of some of the initial jobless claims net out there, the reports, and of course I would expect that we'll probably see the government's reports here coming here probably tomorrow, if not early part of next week as well. Let's see, aside from that and outside of some financial news, we get this. Out of American Thinker, it says it's time for parents to reclaim authority over their children. And probably no better time than now to do that, especially given what is playing out in schools all across America with CRT to mask mandates to jab mandates to who knows what all else sort of crap is going to get thrown at you. Frankly, I think the model is getting broken more so day by day here as we see all this crap play out. People are just saying, saying they're fed up enough, we're done with this crap, we're going to homeschool and be done with their public school systems that peddle garbage. So the results of the Virginia gubernatorial race made two things clear. First, Dem leaders, in lockstep with teachers' unions, want unbridled control of children through public schools. Second, growing numbers of increasingly passionate parents are standing up to the threats to their parental authority over their children. And turning down former Governor Terry McAuliffe, Virginians sent a resounding message to the entire country. Parents will fight for their rights and for their children. Now, McAuliffe's candor during a September 29th debate against Glenn Youngkin set parents on fire and likely cost him the election. Referring to books with sexually explicit material, he vowed that he would not let parents come into schools and take books off the shelves. He doubled down a few seconds later with his indicative statement, "I don't think parents should be telling schools what they should teach." Pretty brazen, right? But his loss was not just a matter of some ill-advised comments. Disturbing as they were to many parents, McAuliffe's actions while Virginia governor in 2016 revealed that, in his mind, parental consent is not applicable when it comes to what is taught in the classroom. Specifically, he vetoed a bill that would have required schools to warn parents if their children would be assigned books with sexually explicit content. Clearly, this is not just a Virginia issue. On the national stage, just a few days after McAuliffe's debate statements, Attorney General Merrick Garland threatened to sic the Department of Justice on parents who speak out against the radical politics, practices, and curriculum in their children's schools. Now, teachers' unions are also major players in the drive to exercise control over the next generation. With the remote sessions that became the norm due to COVID school shutdowns, parents had a front row seat in their children and teens' classroom. They were understandably shocked to learn that political indoctrination had replaced academic learning, and the longer teachers' unions thwarted the reopening of schools to in-person learning, the more parents were exposed to the left-wing agenda dominating the school day. So, not surprisingly, parents by the droves pulled their students from public schools mid-year and in the fall of 2021. The radical ideologies being taught range from gender redefinition and self-selection, the rewriting of history, and critical race theory. But the negative impact on our children's hearts and minds is not limited to instruction. It is implemented through school policies and practices. For example, students as young as age 5 are not only taught that their gender is open to their own interpretation and selection, but they are also encouraged to self-select the bathroom they should use and the preferred pronouns, regardless of whether they match their biological sex. Not only is all this often taking place without parental consent required, but in many cases it is even kept secret from parents and legal guardians through lies and deceit. According to research by Ryan T. Anderson, they wanted to set up a school environment so your child or grandchild can transition at school without you knowing about it, to avoid any inadvertent disclosures. Some districts go as far as to have two versions of electronic student record information. One view the parent sees when logged on, including the student's given name, gender, etc., and another view that only the school can access that includes the conflicted name, gender, and preferred pronouns. So legal experts Sarah Parshall-Perry and Alexander Phillip argue that this overreach and deceit by our public schools violates the equal protection requirement of the 14th Amendment, as well as the 1974 Family Educational Rights and Privacy Act, which grants parents the rights of their children's school records. A lawsuit in Wisconsin is underway as the Kettle Moraine School District authorizes students to change their names and gender pronouns void of parental consent. And prompting children to question their basic identity, schools not only breed confusion, but mental and emotional harm. And their agenda is not limited to words. They actively facilitate gender transition measures. For example, in California, students who qualify can go to a Planned Parenthood clinic under the guise of a wellness center on their school campus to receive a prescription for hormones of the opposite sex. In effect, estrogen for males and testosterone for females. All this is free of charge and requires no parental consent. Furthermore, those prescribing the gender transitioning drugs can't even ask for a parental consent. But that's not all. Due to the Biden administration reinstating funding for Title X, under these federal dollars and parameters, preteens and teen girls can be referred for an abortion on their school campus, during the school day, and in secret from their parents, at the school's wellness center. Well, McAuliffe was a bit of a pioneer in 2016 when he used his political power to ensure that parents were unaware of sexually explicit books placed in the hands of their children. Yet far graver damage to our children occurs every school day across our nation today, some with irreversible, life-altering consequences. This includes young girls losing their ability to have children later in life, or, at the other end of the spectrum, choosing to end the life of their preborn child with the encouragement of their school's clinic, all with no guidance or input from their dad and mom. Young boys are also led to experiencing lifelong implications from taking estrogen hormones, and the above-mentioned gender-altering practices are linked with higher rates of anxiety, depression, self-harm, and suicide. In all these cases, children are being fostered to make significant decisions that can cause pain for a lifetime. Public schools have gone too far and need to be held accountable. It's time more parents nationwide join those in Virginia to raise their voices and exercise their votes to elect political leaders, superintendents, and school board members who will work with and for parents in the academic education of their children. These are our children, not theirs. So there you have it, some pretty punctual words by way of American Thinker here this morning. And of course, yes, it is absolutely well past time for people to get engaged in what is going on in schools all across these lands. And I think we're seeing that. I think we're seeing a quiet rage continue to build. And I think it's only going to snowball. So aside from that, another Kamala Harris aide suddenly quits as more Democrats abandon unlikely 2024 nominee. And of course, we already know that poor Kamala, she's probably one of the least liked VPs of all time. And apparently it's not getting any better. Another Kamala Harris aide is quitting her post. The Vice President's senior advisor and chief spokesperson Simone Sanders is leaving by the end of the year, according to Axios. Why it matters? The VP has faced an onslaught of criticism in her first year centered on her leadership and staff. According to the suggestion, she's not the Democratic Party's preferred nominee for 2024, Axios reported. The backdrop: Sanders was seen as one of the central staffers for Harris as a candidate and is known to be personally trusted by Harris herself, the staffer most frequently or visible by her side, the report added. As reported at Becker News earlier, the White House has descended into open rebellion after a Kamala Harris hit piece on the Bidens was published by Old Clown News. The bitter feud claims another casualty, the Vice President's Communications Director, Ashley Etienne. Now, Kamala Harris's Communication Director, Ashley Etienne, is leaving the Vice President's office after reports staff are infighting and her boss is being sidelined, the Daily Mail reported. Etienne, a former staffer to Nancy Pelosi and Barack Obama, joined Harris's team shortly after the election, the report said. Says at the time she said she would only stay for a year. Vanity Fair first reported the news. Etienne is leaving in December to pursue other opportunities, the White House told the publication. Ashley is a valued member of the Vice President's team, who has worked tirelessly to advance the goals of this administration, the official added. A Clown News claimed its hit piece came from nearly 36 former and current Harris aides, administration officials, the Dem Party operatives, donors, and outside advisors spoke exclusively to Clown News. The entire piece smacks of a torrent of leaks from inside the Harris's inner circle. But the bitter infighting between the Harris and Biden camps goes back even before the presidency. The Clown News story, that again appears to be leaked from the Harris camp, makes no secret about the VP's presidential ambitions. and seems to even contain a thinly veiled threat. Well, to that I say good luck, because I pretty much guarantee you that there isn't going to be too many people who are going to side with old hashtag heels up Harris. We know her record, and she can't do squat. She can't even handle going down to the border without lying and subjugating and lying to the press about, well, so what if I haven't been? A lot of other people haven't been either, right? Can't handle it. What is she good at? Not much. So aside from that, out of DJHJ Media, David J. Harris Media, exclusive, Justice Thomas is listening. Potential SCOTUS hearing, major call to action on election integrity. Says a prominent call to action is right here to all Americans concerned about the integrity of elections and civil rights in the United States. Finally, after many ups and downs over the past year since the 2020 presidential election, several people see promise in a new filing at the U.S. Supreme Court by Kelly Sorrell. President Donald J. Trump got historic numbers of blacks and Latino votes. Those voters were disenfranchised, and that is illegal because the states took money from the federal government under the Voting Rights Act of 1964 and HAVA to secure safe and fair elections for minorities. Something needs to be done. Says, okay, Patriots, we finally got this right. Please help get this out. We must bring light to our case. We need all Patriots to write their grievance or affidavits to Justice Thomas and add the first page to their grievance by December 7th. Each state must write what was done wrong, Bianca Gracia, president of Latinos for Trump, told me. So, number one, if you are impacted by this, disenfranchised, wish to put together an affidavit or otherwise, number one, make a copy of the first page of a lawsuit from here. Lawsuit we can find right there, apparently. Says write out your findings from your state about the 2020 election if you believe there were problems or civil rights infractions. And number three, mail by U.S. mail to Justice Clarence Thomas to the U.S. Supreme Court. So the focus here, we want anyone who believes they have a civil rights issue with the 2020 election to contact Justice Thomas by U.S. mail with their story about what happened during the election and tell him if there were problems with mail-in ballots or with counting ballots or with civil rights. And we hope that someone from every state will write him, even if it's just a paragraph, Gracia said. According to Gracia, Thomas has had Sorrell's filing on his desk for 90 days, and that is a good sign, indicating that interested parties may get a preliminary hearing to talk about what they see as a civil rights infractions during the election. So to call to action here, do it now, don't wait. Do it by December 7th. Send a letter about your state and any election issues by U.S. mail to the Honorable Justice Clarence Thomas, Supreme Court of the United States, 1 First Street, Northeast, Washington, D.C., 20543. Gracia, president of Latinos for Trump, spoke to me about Sorrell's filing, which is, in a way, an extension of what Gracia had attempted to file last year. More on Gracia's case is below. Says, I think what Kelly has done is brilliant, and I have renewed hope that we are going to get a hearing at the U.S. Supreme Court so we can talk about the civil rights. Her case is so smart, Gracia said. And of course, you can go to her website, Latinos for Trump. There's a link to the filing and all that good stuff. Says, I covered the story of Bianca's filing for a hearing on a civil rights lawsuit that gave Sorrell a good foundation for her case on Thomas's desk. And further background says from Bianca Gracia, founder of Latinos for Trump. We'll break from that there, I guess. Bottom line is this. If by chance you are an interested party, wish to write a letter in a campaign or otherwise, this is where you do that. Do it by December 7th, or presume it's got to be postmarked by then. Whether it be a paragraph, whether it be a full-on onslaught of whatever it is you may have seen. That's where you send it. Send it to the Supreme Court of the United States, 1 First Street, Northeast, Washington, D.C., 20543. Send that to the Honorable Justice Clarence Thomas and do that by December 7th. So aside from that, Insider Paper says EU launches global gateway infrastructure plan to rival China's Belt and Road Initiative. which is interesting because, frankly, China has been on a warpath over the years to get as many countries aboard their Belt and Road Initiative, and to that end, with a lot of my coverage net that I've done on China's Belt and Road over the years, many of these countries have already signed on to it. So I'm kind of surprised by this, but nonetheless, says, according to the BBC, the European Union has revealed details of a $340 billion global gateway plan that it describes as a true alternative to China's Belt and Road Initiative. Ursula von der Leyen, President of the European Commission, stated that the Global Gateway scheme should become a trusted brand. Now, China has funded rail, roads, and ports, but it has also been accused of leaving some countries in debt. According to the report, the Commission chief stated that countries require trusted partners to design projects that are sustainable. The EU is considering how to leverage billions of euros from member states, financial institutions, and the private sector. And according to Leyen, the projects must be of high quality, have a high level of transparency and good governance, and deliver tangible results for the countries involved. Now, according to one EU official, Africa will be a major focus of the scheme. China's strategy is spread to Africa, Asia, the Indo-Pacific region, and the European Union. COSCO, a Chinese conglomerate, owns 2/3 of the massive Greek container port of Piraeus, and the China Road and Bridge Corporation has constructed a key bridge in Croatia. And when it comes to investment choices, said the Commission President, the few options that exist too often come with a lot of small print, which includes big consequences, be it financially, politically, but also socially. The projects had to be of high quality and with a high level of transparency and good governance, and they had to produce tangible results for the countries involved. And of course, if you followed anything to do with the Belt and Road Initiative, as China has rolled this out and ensnared many a country all across the southern part of Asia, whether it be the land route, whether it be the water route, whether it be the polar Silk Road, things of that nature, and especially countries in Africa. We know that this junket and that they are on, they know that it's going to ensnare these folks and that they're not going to be able to repay these loans. And guess what happens? All of a sudden, China owns your ports or owns your railways and various key bits of infrastructure in said countries. Will EU combat that? We'll have to see. So last but not least on the morning, video: Joe Rogan eviscerates media for reporting Waukesha massacre as an accident. A effing SUV caused an accident? What are you saying? Did the car go haywire? Did the auto driving feature go nuts? So Joe Rogan apparently on the warpath yet again, and it's good to see that, frankly, calling out the media for the BS garbage they continue to put out. I'm glad to see that he's doing that. Joe Rogan once again tore the legacy media apart on his podcast, this time over its coverage of the Waukesha attack, after several outlets referred to the murderous rampage as an accident. The guy in Wisconsin had tried to run over his effing girlfriend, and he was out on only $1,000 bail. He tried to kill someone with his car. He was out on $1,000 bail, and then he runs over 50 people in a car, Rogan explained. Here's the effed up part. The way they're covering that story in the news, it's not the man who killed those people. It was an accident that was caused by an SUV, Rogan said, referring to NBC, Clown News, CBS, and others, calling the attack a crash and an accident. Rogan continued, a effing SUV caused an accident? What are you saying? Did the car go haywire? Did the auto driving feature go nuts? No, this evil man with real problems, a psychologically effed up human being, drove into a crowd of strangers. And we'll let this play through.
Give yourself a headache. If you took all these steps, step one, defund the police. Step one, hire these insane, progressive, air quotes,
crime-loving prosecutors,
DAs that are letting people off. And like the guy in Wisconsin that ran over those 50 people. That guy, he had tried to run over his fucking girlfriend. He was out on only $1,000 bail. He tried to kill somebody with a car. He was out on $1,000 bail, and then he runs over 50 people in a car.
Engineered recidivism.
And then here's the fucked up part. The way they're covering that story in the news.
It's all about the car.
The man, it's not the man who killed those people. It's an accident that was caused by an SUV. A fucking SUV caused an accident? What are you saying? Did it go haywire? Did the auto driving feature go nuts and it just plowed into the crowd? No, this evil man with real problems, like a really psychologically fucked human being, drove into a crowd of strangers.
So, in the words of Joe Rogan, and he's absolutely right calling these idiots out, everybody calling this thing a parade crash and everything else, it's heinous. They never want to point the blame where it actually belongs. No, it's this inanimate object. The Washington Post reported that the attack was caused by a SUV, and the New York Times reported the SUV incident on page 22. And of course, he's highlighting these pieces out of said publications. Says the media also lied and suggested that suspect Darrell Brooks was fleeing another crime scene and just happened on the Christmas parade. So there you have it, by way of Joe Rogan, yet again on fire. Obviously calling out the lying mockingbird media for what they are, trying to push a narrative as usual, and we're calling them out on their lies yet again. All right, well, that is going to do it for the broadcast here this morning. I appreciate you guys tuning in as always. And by the way, yes, today we are back on the YouTube side, at least for now. Back from a 2-week hiatus, thanks to Susan and Company rifling through some old shows dating back a few years and finding things they don't like that were perfectly okay back then, but certainly don't cut the mustard today. And so who knows how long I'll be on YouTube, and, if we get the old third strike, it's bye-bye. Done with the old platform. Will I start another one? Yeah, we'll have to see. But nonetheless, that's going to do it for this morning. I'll be back on here this afternoon over on the Soapbox at 9 p.m. Eastern. We'll kick that show off here a little bit later on today, and we'll give it a go there. So take care. God bless. We'll see you back here tomorrow.